This JTS Mortgage Minute is brought to you by JTS and Company Mortgage Professionals.
Welcome back, everyone. Jeff Farnham joins us now with the JTS Mortgage Minute. Jeff, good to see you again.
Yeah, good to see you, Bill. Yeah.
It looks like the Federal Reserve anticipates a rate hike fairly soon. What does that mean to mortgage rates?
Well, there's a lot of speculation about that. The Fed's going to meet again in a couple of weeks, and out of that, there's been some discussion that we may see a rate hike sooner. And what they're talking about in particular is what we call the Fed funds rate, and that's a rate that banks use to charge each other overnight lending rates and whatnot. It has broad implications because it affects a lot of different rates. A lot of different things come into play with that, and can really affect the bond market. And in turn, the question is it going to push rates a little higher or a little lower? The anticipation would be that they're probably going to go a little higher if they do raise the Fed funds rate.
What does this actually mean for me as a homeowner or as a new home buyer?
Well, we've experienced over the past several years and have really had historically low mortgage rates. I think we're still going to be in historical lows or well below the national average of what we've seen mortgage rates. You've got to keep in mind an average rate over, say, the past 30, 40 years has been, in the 7-8% range. And you can even remember back in the late 70s, early 80s, rates at 17 or 18%. We're not going to see that, I don't think. But we may see rates rise. Right now, 30-year fixed are hovering around the 4% range. And they bounce between 3 3/4, 4.5, depending on the type of loan you're doing, credit score, and all these other factors. We may see rates around 4.5% or so. And that's not necessarily a bad thing, but it does take away some of the purchasing power. You take a $150,000 loan, for example, at say a 4% rate versus a 4.5% rate, that payment's going to be $40 to $45 higher than it would be with a lower interest rate. So the implication could be is if you've been thinking about buying or refinancing, that you may pay a little more for the same purchase price on a home.
New administration's been in office for about a month now. Are things starting to settle down a little bit? Well,
we're starting to see some things from a regulatory standpoint that may make things a little bit easier from a regulation standpoint. Underwriting-wise, things are still very, very good, very strong. We're still able to get loans done in short order, and it's not that difficult a process. People still have the perception that getting finance for your home is difficult. It's not, and again, with rates, anticipating rates climb a little higher, if you're thinking about buying or even thinking about refinancing, you want to take advantage of when the rates are low. But yeah, I think we'll see things begin to pan out. The economy gains traction and we really get going again. It's certainly going to put a little pressure on rates to see them rise as things get stronger.
Good information as usual. Of course, if you missed last week's show, you can always go to their Facebook page. And if you want more information, you can go to their website, jts.com, jts-co.com, or to pre-qualify, you can text JTS at 48421. Jeff, good to see you.
Yeah, good to see you, Bill. Thank you.
We'll take a break, come back with more in just a moment.